All right, everybody, welcome back to the deep dive.
Yeah.
Today we're diving headfirst into the Bitcoin market.
Definitely a hot topic.
For sure. And we've got a ton of expert analysis
Yeah.
and data we've been digging through from some really interesting sources like CoinGlass, Bitcoin Data 21.
Mm-hmm.
We're focusing specifically on December 2023, what happened,
Yeah.
what went down in December, and of course where things might be headed as we roll into 2024. And
Right.
I think a lot of listeners are probably wondering the same thing. We've been hearing this question a lot.
Yeah.
Is the Bitcoin bull run over?
Yeah. Are we done?
Yeah, is this it?
The party's over.
Yeah, everybody pack up, go home.
Time to sell.
Well, buckle up,
Yeah.
because the answer is a little more complicated than a simple yes or no.
It always is, right?
Right.
It's never simple with Bitcoin.
It never is.
It's always a roller coaster.
So December 2023 was a pretty interesting month for Bitcoin.
Yeah, December was, I think a lot of people saw a 2% dip and they freaked out a little.
Yeah.
A little bit of panic.
Right. But what's really fascinating to me is that a lot of analysts are actually seeing this as a sign of strength, like it held its own relatively well.
So instead of like a complete free fall.
Yeah, total crash.
Yeah, it kind of just took a breather.
Yeah, almost like a boxer,
Uh-huh.
like dodging a punch and coming back,
Yeah. Regrouping.
gathering energy.
All right, so, we were talking about CoinGlass before.
Right.
And they're seeing this kind of holding pattern
Yes.
as a sign that Bitcoin needs more upward momentum.
It needs something to really push it, break through.
Yeah, to break out.
Yeah, and what's really interesting is that CoinGlass is saying that momentum isn't just about market conditions. It's heavily influenced by how investors are behaving, like it's a very human element to all of this.
Yeah, it's almost like a self-fulfilling prophecy sometimes,
Right, if everyone believes it's going up, then it will.
Exactly. Or if everybody's like, oh no, this is it.
Yeah, the sky is falling, everybody's sell. Yeah, then that could definitely have an impact. So psychology really plays a big role here.
Huge. It's always fascinating to me how much of the market is driven by emotions rather than, cold, hard logic.
So speaking of emotions, let's talk about those 2024 projections. I mean, what's the overall sentiment? Are people optimistic or are they, running for the hills?
I'd say there's a surprising amount of optimism floating around for 2024.
Really?
Yeah. And a big part of that is tied to what analysts are calling fractal patterns. And I know that sounds complicated.
It sounds very mathy.
It does, but it's actually a pretty cool concept. Like, imagine you're looking at a coastline from above.
Okay, I can picture that.
You see all those jagged edges, the inlets.
Yeah.
And then you zoom in closer and closer, and you start to see those same patterns repeating themselves just at a smaller scale. And that's kind of what financial fractals are like. They're these repeating patterns that analysts are seeing in Bitcoin's historical price data.
So they're basically saying history might repeat itself.
In a way, yeah. Like, these patterns might give us clues about where Bitcoin is headed in the future.
That's pretty wild. I mean,
It is pretty mind-blowing when you think about it.
if we could actually predict Bitcoin's price movements based on these historical patterns.
Well, it's definitely a hot topic in the world of Bitcoin analysis, whether or not these patterns are reliable indicators, but it's something to keep an eye on for sure.
So we've got these fractal patterns, these historical echoes.
Right.
But then we also have to factor in the human element, like you were saying before.
Absolutely. And one group that can really shake things up are the short-term holders.
The STHs.
The STHs, exactly. So these are basically investors who are relatively new to Bitcoin. They haven't been in the game as long as some of the OGs.
So they're kind of the newbies on the block.
Yeah, exactly. And they can have a big impact, especially when the market is trying to recover.
Why is that? Like, why do they have so much influence?
Well, it all comes down to their average buying price, which right now is hovering around 86,000. So if Bitcoin hits that price point, it's like a signal flare to these short-term holders.
Like a bat signal.
Exactly. They're like, oh, this is my chance to make some profit, and that could trigger a wave of selling, which could impact the entire market, push the price back down.
Interesting. So 86,000, it's kind of a psychological barrier then.
Absolutely. It's a point of resistance.
Okay.
Where a lot of these short-term holders might get spooked and decide to cash out.
But couldn't that backfire? Like, what if it creates a selling frenzy instead of the hoped-for surge?
That's a great point. It's a double-edged sword, really. It all depends on how confident those short-term holders are in Bitcoin's long-term potential. If they believe in it, they might hold on even if the price dips below their buying point. But if they panic and start selling en masse, it could create a downward spiral.
It's almost like a test of faith then.
Right. Like, are you in it for the long haul, or are you just looking to make a quick buck?
And I know not everyone is on board with this whole 86,000 thing.
Oh, yeah. Opinions are definitely divided on that one.
So what are some of the differing viewpoints that are out there?
Well, you've got some analysts like Bitcoin Data 21 who are pretty skeptical about Bitcoin hitting that price point anytime soon. They're looking at the charts, they're looking at the data, and they're just not seeing it.
So they're saying don't hold your breath.
Yeah, but here's the kicker. They're actually planning to take risks if it does happen.
What? So they're saying we don't think it's going to happen, but if it does, we're all in.
Yeah, basically it's a fascinating strategy. It's like a wait-and-see approach, but with a twist.
So they're kind of hedging their bets.
Yeah, exactly. They're not putting all their eggs in one basket.
Right, because it's Bitcoin. It's unpredictable.
Always unpredictable.
So then on the other side of the spectrum, you've got groups like On-Chain College,
Right.
who are taking a more measured approach.
Much more cautious.
Yeah, they're basically advising investors to just tune out the noise. Like, don't freak out if Bitcoin fluctuates below that 86,000 STH cost basis.
They're all about staying calm and focused on the bigger picture.
Yeah, don't get distracted by the day-to-day ups and downs.
Exactly. Focus on the long-term trends.
Easier said than done sometimes, right?
Definitely. Especially in the world of crypto where things move so fast.
Right.
But it's good advice.
Yeah. So we've got these different perspectives. We've got these fractal patterns. We've got the STHs, their average buying price.
Yeah.
It's a lot to take in.
It is a lot.
So how do we even begin to make sense of it all?
Well, I think the key is to really understand the individual pieces of the puzzle. And those pieces are the key indicators that we've been talking about.
So it's like detective work.
Exactly. We're gathering clues, trying to put together a picture of what's really going on.
Okay, so let's break down those key indicators.
All right. So we've already talked about the STH realized price, that 86,000 number that everyone's watching.
Right.
But we also have investor sentiment. Are people feeling bullish or bearish? You know, is the mood optimistic or fearful? And that can have a huge impact on price movements. Then there's market liquidity. How easily can Bitcoin be bought and sold if there's a lot of liquidity? It means it's easy to get in and out of positions, which can make the market more volatile. And then, of course, there are the macroeconomic factors, which what's happening in the global economy. Are interest rates rising? Is inflation a concern? All these things can affect Bitcoin's price.
So it's not just about looking at Bitcoin in isolation.
Exactly. It's all interconnected.
So you're saying that we need to be looking at all of these factors, the indicators, the sentiment, the macroeconomic trends.
All of it. It's like trying to read the tea leaves, but instead of tea leaves, it's charts and data and news headlines.
And don't forget those fractal patterns, those historical echoes.
Right. Those two. Those are potentially a very powerful tool for understanding Bitcoin's price movements.
So if we can put all of this together, if we can understand these indicators, if we can maybe even decipher those fractal patterns, does that mean we can predict the future of Bitcoin?
Well, that's the million-dollar question, isn't it?
I guess so.
If Bitcoin's price is influenced by these predictable patterns, by investor behavior, by all these things we've been discussing,
Yeah.
can we really say its future is completely uncertain, or is there some level of predictability hidden within the chaos?
That's something to think about for sure.
It is, and I think the best way to figure it out is to keep exploring, keep learning, and keep asking questions.
And maybe one day we'll crack the code.
Maybe one day.
All right, everybody. Thanks for joining us on this deep dive into the Bitcoin market.
Yeah, it's been a wild ride.
As always, stay tuned for more insightful discussions. And remember, the world of Bitcoin is constantly evolving, so keep learning, keep exploring, and never stop asking questions.
That's right. The future of Bitcoin is waiting to be discovered.
See you next time.
See ya.